let's call them liquidity cycles. I won't call it Bitcoin cycles. I don't believe in that, but liquidity cycles. Now, in past liquidity cycles, gold has lead, okay? Metals have lead. So this does feel a little bit 2021-ish to me.
Welcome back to another episode of Token Narratives. I'm Graham Stone, joined as usual by Bitcoin.com news research gigabrain David Sencil, and we're really excited this week to have Bill Barhydt. He is the founder and CEO of Abra, which is a digital asset wealth management and lending platform. He's also a longtime investor and operator in the Bitcoin and crypto space. So we're excited to pick his brain on all things Bitcoin and crypto today. Thanks for joining, Bill.
Graham, good to see you. David, good to see you as well.
It's nice to meet you, sir.
Thank you.
All right. So let's get into it. Bitcoin currently having not performing well, let's relatively speaking. So currently trading at $84,000, kind of dropped overnight. Meanwhile, precious metals, gold, silver, copper, palladium, platinum, they're all spiking to all-time highs. So that's where I want to start off here, Bill. One of the to get your thoughts on, like, that it seems there are many tailwinds, narrative or otherwise, that Bitcoin is facing right now. So let's start off with the
headwinds.
Headwinds. Thank you. That Bitcoin's facing right now. Let's start off with the one related to precious metals. Precious metals pumping, Bitcoin not. So, is the digital gold narrative dead? Was it ever a thing? What are your thoughts?
Yeah, I mean, yes, it's a thing, and yes, it was a thing. It still is a thing. I see it a little differently than a lot of the current narratives. Look, price tends to follow narrative, and right now, clearly there's a geopolitical debasement trade going on, and people referred to digital gold as this idea that Bitcoin would just simply follow the debasement geopolitical narrative, just like gold would. And I don't think that was really the way it was ever going to play out in hindsight, because I do think that Bitcoin is a better gold once it is really globally established to the degree that gold is already established, and it's not, right? And so it makes sense that if you have a digital asset that is deflationary, at some point soon, it will take on that role. You don't have transport issues. It's can be more private. You can carry it with you. You don't even have to carry anything. You can memorize a mnemonic, right? So all of those things purport, independent of price, towards it being a better gold. In that regard, it's a better gold today. Okay. Independent of that, I think that there is a path to acceptance, which basically will, cause it to, in the next empire's fall, become the gold for the debasement / geopolitical turmoil that will ensue. Okay, I don't think it's going to be that for this empire's fall, because it's still on the way up in terms of getting distributed in the first place, meaning the number of people who understand what it is. The number of people who've heard of it is huge. The number of people who understand what it is still relatively small, right? You talk to people about Bitcoin, they're like, "Oh, I missed the boat." Well, that has nothing to do with what Bitcoin is, right? You didn't miss the boat. You misunderstood what it is, and so that's the disconnect in terms of, like, oh, is it digital gold? It's on its way to becoming digital gold. It's on its way to becoming an inflation hedge. Along the way, lots of volatility. Now, that volatility is actually shrinking, even with this pullback, right? So I would say I would guess, I don't know for sure, I don't have the numbers in front of me. I wouldn't be surprised if post-election run-up, if Bitcoin has been less volatile than NVIDIA. I don't know for sure, but I wouldn't be surprised if that's true.
I know that gold in the past like week or two has been more volatile than Bitcoin. I think
100%. It's
that
been,
is.
I've
Yeah.
seen 10% intraday swings, which is crazy for a 5,000-year-old asset. Right. So, but it's not, when you look at it in the context of what folks like Ray Dalio so astutely talk about, which is we are now at the end of the old world order and we're transitioning into the new world order. And that's when you get the geopolitical turmoil, because the dollar was supposed to be based upon gold. So you didn't need to hold gold. They could outlaw the holding of gold for that reason. Right. Well, turns out that you do need gold when the old world order is falling, I guess, because you haven't replaced it yet with something better. We're still on the path to doing that. And so I think what we're seeing is gold leading. Now, independent of that, okay, because it is getting a much bigger run up than it has in past, let's call them liquidity cycles. I won't call it Bitcoin cycles. I don't believe in that, but liquidity cycles. Now, in past liquidity cycles, gold has led. Okay, metals have led. So this does feel a little bit 2021-ish to me in terms of, okay, Trump, Bess and co. wanted rates to come down precipitously last year so they could refinance debt, that they could pump money into the system, they could show big stock gains, all the things they like, right? That didn't happen for myriad reasons, some of which we just alluded to. So now the question is, are they going to make that happen this year? And I think they are, is the bottom line. And the last couple of times that's happened, Bitcoin has followed gold. Okay. And so, but that's a different trade. I'm not talking about the, global debasement slash, geopolitical turmoil trade. I'm talking about the liquidity trade. They're two different things. Okay. So I think people have to realize this is a multi-dimensional world we live in, and there's multiple things happening at the same time. I said a lot, so maybe I'll come up for air and let you guys inject.
Okay.
Can
so
I
to summarize what you're saying, maybe on there are two completely different time scales. One is the like, I don't know, multi-decade generational thing where maybe Bitcoin replaces gold, and the other is like this short-term risk asset liquidity. What's happening with the like
That's right.
specific policy decisions at the Fed and the like fiscal
That's exactly right.
decisions.
And as we, if you zoom in on charts, you see lots of intra-week movements that can partially be explained as something might be moving up and to the right by news, right? By uncorrelated news, whatever. What might seem like uncorrelated news, but when you zoom out, right, like it looks like a straight line up and to the right, right? So there's different time frames have different meanings, and people who try to trade as you zoom in and zoom in and zoom in are the ones who usually get crushed and killed because they don't understand the nuances of what causes those movements.
Yeah, I mean, I think there was something I saw on crypto Twitter or just on X that I think illustrates this kind of gold versus Bitcoin dynamic. And a gold bug and a Bitcoiner were fighting over which is going to increase more in percentage terms for the next year, right? So they're fighting. Finally, the gold bug said, and this actually happened. It was awesome. So like, okay, 100K. Let's do a bet. 100K today. I'll buy 100K of gold. You buy 100K of Bitcoin, whatever amount that is. And in a year, whoever wins, the loser has to send the other their preferred asset, right? And the Bitcoiner was like, look, I think I'm going to win, but if I lose, I'm not going to send you physical gold. I don't even know where you live. I don't know if it's cross border. I'm not buying bars of gold and sending it somewhere in the world. And then the gold bug was like, okay, no, we can still do this bet, but we'll settle in Bitcoin. Right? I'm just
there
like,
you go.
isn't that
That's my point. Why is it a better
right?
gold today? There you go. It's just the narrative has to catch up, which is going to take a generation. That's it.
Yeah. So I thought that was like the biggest self-own, and it's very apparent.
Awesome. I saw that. Yeah. So, and we're gonna get there. I think, look, there's always a chance something better comes along. Can't deny that. But it's been what, 13, 14 years, and it's seems more solid than ever to me. It's been de-risked in many ways, not only geopolitical, but most importantly, technologically speaking, it's been mostly de-risked as far as I can tell. I'm sure you'll want to ask about quantum computing, but the protocol was designed to basically replace the digital signature algorithms. And anyway, I feel like it's all moving in the right direction towards being de-risked as the geopolitical answer to the next cycle. And in the short term, it's going to basically be the liquidity suck, which is going to trail gold, which is going to lead alts, especially L1s, right? And that makes sense to me.
Yeah, so let's talk about quantum for a second. Like I've seen this just dominate headlines for the past month or so. You have like Luke Groman saying in a podcast he's for the first time ever sold most of his Bitcoin in large part because of this quantum risk. I've seen other people on other podcasts like Bips and Bips last week, a longtime Bitcoin believer saying that the quantum risk has to be now calculated into the price. What do you make of this? Is it a real risk? Does it mean that you need to kind of hedge how much exposure you'd have to Bitcoin?
So, look, there's always this friendly tension between the macro heads and the techno heads. I tend to skirt both worlds because I have a degree in computer science and studied math, and I happen to work in a job that involves macro. So I have reasonable understanding of both, and from that perspective, the state of the conversation is a little silly. On the other hand, it does have to be addressed. It's just not an acute problem that would warrant somebody being an alarmist for selling their Bitcoin in early 2026. The Bitcoin roadmap should be long and narrow, right? And hard to execute because you're trying to change the atomic structure of gold. And it does feel like the atomic structure of gold over the next several years and decades is going to need significant upgrades when it comes to hashing and digital signature algorithms, and to make them quantum ready. Now, the majority of people that you talk to in the Bitcoin technology world agree with that. As a matter of fact, I haven't had an intelligent conversation with anybody who doesn't. It's the timeline and it's the process. And Bitcoin needs that process. That's just the way it is. I've seen significant headway towards getting people to pay attention over the last, couple hundred days, I would say, and it's going to accelerate. So there's no point or reason for an alarmist perspective. Not to mention the fact that if rogue government ended up with a quantum computer, Bitcoin wouldn't be in the top 10 list of concerns for what they would probably be spending time on, right? So independent of that, I think Bitcoin is going to be just fine in this regard.
Do you think it's fair to say that the quantum fudders, as it relates to Bitcoin, they just don't really understand how the Bitcoin upgrade process works?
Look, I could go to a dinner party with my friends in LA and wax eloquent about fashion. And my guess is, to the three of us, it might sound like I actually have an semi-informed opinion. To them, I probably sound like a bumbling idiot. So, anybody can talk about whatever they want. It's the nature of living in a country where we, or in a Western society or an Eastern societies where they practice free speech for the most part. That doesn't mean they know what they're talking about. So, yeah, look, people are in a free market, can do what they want with their money. If you're selling your Bitcoin because you are convinced the price is going to go down in the short term, and you basically believe you can, short-term swing or day trade better and make more money than people who are going to long-term swing trade, go for it. It's fine. God bless. if you're getting rid of your Bitcoin because you're afraid of the quantum trade, you're out of touch with reality. So, it's
So
that's the bottom line.
yeah, potentially this let's call it quantum FUD discount that we're seeing right now in Bitcoin, if that's what it
I
is.
don't think that's what it is at all.
You could be seen as an opportunity.
Yeah, but I don't think that's what it is. In other
Okay.
words, I don't think that the price of Bitcoin fell from 120 to 84 because of fears of quantum computing. I don't. I think it fell because the narrative has died as a result of the liquidity not coming back into the cycle, combined with the DAT narrative, which confused retail. And so I think that will all work itself out. It may take 6 months. It might be a second half of 26 thing. I don't know. I care a little bit. I don't care that much because I know where it's going, and I know why. It's more importantly, I know why it's going there, right? And so I don't think it's a quantum narrative that's driving this in the short term. I don't.
Confused retail is an interesting euphemism for fleeced retail. No, I'm just kidding. But
depends on your timeline, right? So yeah.
What about the another headwind, or another narrative headwind at least, is the Bitcoin OGs are selling just billions of dollars worth of Bitcoin. How about that? Is there some truth to that? Did that contribute to the
absolutely
to price
absolutely.
decline?
I don't think it contributed huge. I think other things. I think lack of retail money was a bigger deal because the rotate. As a matter of fact, if you go back, it's the opposite. If you go back to late last year, like let's say summer to fall, when the rotation was happening, the price wasn't moving much, right? So what I mean by rotation is you had a lot of whales selling, but they weren't selling like 100% of their positions. If you look at the wallets in mass, what you're seeing is 10 to 15% of assets, and on average were being sold, not right now, by those large holders. And that to me and somebody put it like it was a Bitcoin IPO moment. And that actually was a very eloquent way to put it, because those people have been in the money for a very long time. And, okay, so maybe a little bit of diversification, even if you buy Michael Saylor's soliloquies that you shouldn't diversify, to them there's no harm, no foul, right? Because I'm still Bitcoin wealthy. You may as well sell 10%. It's like becoming a Catholic when you're on your deathbed, right? What's the harm? So that, I think that's what that was. And I think the price drop over the last few weeks is been a different issue. And again, I think that's a geopolitical fear, risk on asset, lack of liquidity, lack of retail narrative issue.
Okay, and on that, go ahead, David.
Sorry, on that the retail narrative, we've also talked about this a lot, Graham and I. Is AI then kind of like part of this, where I feel like a lot of the speculators, a lot of the retail got attracted by the AI stocks, the quantum stocks, all this stuff that's happening in TradFi land?
Yeah, retail can't really invest in AI right now. I mean, what's the AI investment for retail? I mean, it's hard enough for VCs to invest in retail because it's now the deals are multi-billion-dollar, right? So I think retail is enamored with sports gambling and prediction markets. Honestly, I think that the average person who doesn't think about, is just speculating, is infinitely more interested in prediction markets and sports betting than they are Nvidia shares. Not to say that some people who have mutual funds and or small amounts of direct stock ownership aren't buying Nvidia. Clearly they are. It's a multi-trillion-dollar asset now. But by and large, the conversations I have with people who aren't in my world, when I go to the cities in the US, that's what they're talking about. Yeah.
So did you where did the retail flows go then? Did they go nowhere? I mean, did they go into other assets?
I think a lot of people are, left crypto post FTX, right, and didn't come back. I think a lot of money went into the ETFs, right? Now, I think the ETF float versus the Bitcoin non-ETF float is, I think it's like 85-15, so it's still relatively small. relative to the large float, especially the money that's locked up. But a lot of people got very dismayed with the space when FTX, Celsius, BlockFi, Voyager, pick your favorite grift, they all just died. And good riddance, but it took us a while to recover, and we did. But that recovery was not retail driven. The recovery was two things. It was the fact that the price was already being even more suppressed than just the grift by the Warren regime, right? And so that part of it was like the proverbial beach ball being held underwater, where I think Bitcoin price was being held down by 50, 60% because of the fear and uncertainty around kind of the legal status of Bitcoin and crypto. Once that fear was gone post-election, boom, ball was let go, and the beach balls sought its level above the surface, and that happened. That's what I think that was. That wasn't an expectation around liquidity, because Bitcoin tends to follow other things when the liquidity comes. That was an expectation around regulatory clarity, in my humble opinion. Okay, then the rest of the year we did have an expectation around liquidity in the spring. And that was offset by the IPO moment we just discussed, which caused this rotation, which is why the price didn't fall, but the liquidity didn't come. In parallel, prediction markets are taking off, sports betting is taking off, the FANG stocks are taking off again because of the AI narrative, and the crypto narrative is nowhere to be found. And retail needs that narrative, right? It needs the last cycle, it was Doge and XRP. It was crazy how many times I had to explain Doge to people during the last cycle. I've completely, it was until we had this discussion, I hadn't even thought about it. So to me, that's how long ago it was. So it'll have its moment again. I think when you start seeing retail stimulus checks, quantitative easing, whatever they're going to call it, yield curve control, they're going to have to do something with what's going to happen in your neck of the woods in Japan. And so, call it what you will, but it's going to basically be equivalent of injecting significant amounts of money into retail investors, which is going to find its way into things that are highly liquid, easy to get in and out of, right? And that people, can tangibly understand. And crypto investing is one of those things they understand.
So, do you think this liquidity flood is going to happen in 2026, and it's related to the election cycle?
Well, the midterms are going to drive a lot of what happens for sure. I don't think liquidity cycles in general are related to just election cycles. I think they're related to historically what's happened since the 80s as it relates to, inflation and recessionary cycles, which have mostly broken post-COVID because we've decided that we're willing to print ad nauseum in order to stave off anything post-GFC, post-COVID. But that's historically where those cycles come from. But given the polarity, that extreme polarity we have between the parties now, I think that they don't have a lot of shit on the shelf to bring to bear to make sure that one party's got 30% regardless of what they do, and one party's got 30% regardless of what they do, and the people in the middle are confused right now because at the beginning they had a lot of hope, and right now they're not crazy about some of the things that they're seeing. And so you want to pull them your way. If you're, the 30% on the right, then you give them money. Historically, is what you try to do. So I think that's coming.
So I agree with you. One thing that makes me worried though is Michael Howell, right, of Capital Wars. Correct me if I'm wrong, but I believe he thinks that the liquidity cycle is kind of turning down, and so he sees a trend downward for the next year or two. I don't personally see that, but he's kind of the master at this, and that gives me pause.
Yeah, I mean, look, if the focus is the strength of the dollar, he'd have to be right. I mean, the dollar is about to crash, in my opinion. Now, wait a minute. Let me make it clear. When I say the dollar is about to crash, I think most G10 currencies are going to crash. So the DXY, the Dixie won't fall precipitously because it's a race to the bottom. They're all crashing in parallel, meaning they're all becoming more worthless, right? So if you cared about that as the thing you're trying to stave off, then you would raise rates precipitously. And that's what the bond markets are going to do. That's what the bond markets are trying to do for us anyway. Because right now, when nobody wants to buy your debt, right, the only net buyers that I see for long-dated treasuries are us, meaning the U.S. government and the banking system, who more or less have it forced upon them, and Tether. Everybody else is a net seller, which means interest rates should rise when the demand is falling, right? Because price and rates move opposite each other. So if that's true, government has a problem because the market sets those rates, not the banking, not the Fed. So therefore, they have to try to do other things to get those rates down, especially knowing that it's going to be somebody who's going to toe the Trump administration line, who they're going to put in the Fed, right? And that person is not going to be concerned first and foremost with inflation. They're just not, especially once their inflation narrative catches up to the real-time inflation narrative, which is inflation is close to zero now, right? Yeah, they just like the high GDP number because it looks good, but the reality is that's an AI driven number right now in real time, being offset by the fact that the rest of the economy is not doing well.
Do you Besant and the Trump admin have been relatively unsuccessful on bringing rates down thus far. You seem confident that they are going to be able to do it. How are they going to do that? How are they going to bully the rates down?
I don't know. I'm not saying I'm confident they're going to be able to bring rates
Okay.
down. If I had to bet and guess, my guess is that that they will, right? But it's always at a price, right? So the last time we got rates to zero, it was at the price of printing 25% of the money supply in 18 months. And we paid a massive price for that as a society, massive price, right? And we're still paying, So I think they've learned that you can't do it that way, but they are convinced that with their tariffs and other things that they're going to be able to inject liquidity into the system. My guess is they're going to do stimulus checks. They're going to talk about how much they've raised. Some of that should go to the debt. Some of it should go back to the people, blah, 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 liquidity. So that could be in the face of higher rates too, or stagnant rates. I don't know. That doesn't mean the Fed won't stop. I think right now there's Fed governors who misunderstand the hot economy for AI and the fact that it's not trickling down, and they just have a major problem, in my opinion, with real-time information. They're just not good at it, right? They can only deal with looking, behind them. They cannot deal with real time. It's their Achilles heel for 10 years.
Yeah. And you see this coming, this starting to come this year, probably May, Mayish, right? When the new chairman steps in.
Yeah, I think it's already started with some of the things they're doing to help the banks, but yeah, I think Q2 ish is when it'll start to trickle down a little bit more. It's starting to feel like this could become like an H2 second half phenomenon where, in other words, Bitcoin, I wouldn't be surprised if it turned around tomorrow, but I could also see a scenario where it fell to 60 and went straight up from there. For example, I can actually explain why I think that could happen, but I could also see why I could explain why I think it's going to turn around next week. Ultimately, given how I invest, I don't care. I only care insofar that a lot of my clients don't understand the difference, and so, or why they shouldn't care about the difference. More importantly, and I have to spend a lot of time explaining it to them, and so that's the challenge, right? Because people are just so short-term price sensitive. It's so bizarre, human behavior, because it should really be the opposite, right? If I told you that I had a Ferrari F250 and you could have it for 50 grand and you could turn around and sell it probably for 250 grand pretty soon, there'd be a line down the street to buy it. But if I told you Bitcoin was going to be at $1 million in 10 years and you could buy it on sale for even less than what it was last week, people run for the hills, So it's just human nature is just not easy to navigate.
Yeah, well, to be fair to humans, when Bitcoin does go to, let's say, 60,000, there's no guarantee right at that point that it's going to a million, right? So
No,
it just
but
hurts.
there is
But
a
I'd love
guarantee
to,
that we're going to keep printing money.
yeah, Bill, I'd love to hear your explanation or rationale for why you said yeah, you could see one scenario, it goes down, it wicks it, we get a scam wick to 60K or something. I'd love to or alternatively it just turns around to tomorrow. Love to hear your rationale there.
Oh yeah, geopolitical turmoil. Something happens in Iran. Um, China escalates in Taiwan as we basically escalate in Greenland and in Venezuela, because it's all a big game of what's a board game Risk right now. That's what's happening, right? Everybody's basically trying to lay their pieces on the game board. Markets don't like that. That's part of what's happening with gold, and why I said Bitcoin is behaving still like a risk on asset, since it's not in that gold kind of replacement phase yet. So all of those can point to more uncertainty, but lead me to more believe it's even more likely that they're going to do whatever they have to get money in the system to give consumers confidence, which is why in that scenario you could see a big run up in assets in the second half going into next year. If that doesn't happen and the rest of the economy continues to slow as it is, I think it'll run up sooner. Okay, and maybe not as much in the cycle, but if it wicks down because of what I'm saying, and they start pumping even more money, then the run up's going to be even higher, right? And the
Similar,
price to
sounds very
pay is
similar to the COVID
100%. That's why I'm saying it feels
yeah.
like 2021 in several levels. Yeah, but the price to pay for that is you've got to have the stomach for dealing with the volatility again. I'm torn as to which of those two it's going to be. I like I said before, I care a little bit, not that much, and it's less about my own bags and more about the fact that I spend a lot of my day explaining it to people. But if I had to bet, I would bet it's probably going to start a run up in Q2 ish, and be epic by short term standards versus what we've been dealing with. And the L, I don't think we're going to get a massive alt run where it's just everything like memes and all this crap. I think the L1s are going to have a massive run when that happens, because they're getting big usage and the narrative there is very good. I really like the kind of smart contract platform narrative right now, and so if that's my expectation, but I'll leave it that. Yeah.
Yeah, I'd like
For
to go into that, David, if you
yeah,
don't mind.
yeah, me
That
too.
narrative,
That's
the
what I was going to
L1
ask.
thing, right? Because we talk a lot about narratives, and I tend to agree with you. But what about this concept that yeah yeah that actually value doesn't accrue to the L1 tokens, and people finally sort of realize that, and that overpowers the narrative of like it's the future of the smart contracts, or the future decentralized computers.
Yeah, I think the points are mutually exclusive. So Ethereum's different, right? The Ethereum community messed up the architecture, and in that world, what you're saying is true. The narrative is true, and the reality is true. And I think the way that the L2 architecture, or the L2 based architecture, pardon the pun, for Ethereum has evolved, has been at the detriment of Ethereum itself, in my humble opinion. And I called them out on this when it was happening. Before I said there's no reason to be doing this, and you're basically shooting yourself in the head, never mind the foot, while you're doing it. And I think they regret it now. I really do. Okay, so when I say L1 smart contract, I'm generally referring to the other ones. Solana, Sui, Aptos. I just joined the board of Algorand, and um, you know, Polygon. They're all extremely compelling in different ways to me. I think the AI narrative, people kind of got it because a few people started to explain it when the memes were running, and so it had its hot 5 minutes. but people haven't really processed what it means to have decentralized transaction processing for the agentic web. Sounds like a bunch of words. It's just it, right? But the reality is that's the oracle of the future, and so that value, that to me is the Chuck E. Cheese arcade of the future, and they're going to need those tokens to put in the machine to play the games. And those games are Solana games, Sui games, Aptos games, Algorand games, et cetera, et cetera. And there's only going to be a finite amount of them go around, especially when they're all staked. And so that's interesting to me. Excuse me. But even independent of independent of the AI trade, it's look, DeFi is working. If there's anything we learned from the last cycle is that DeFi works. Right, I was in the middle of all of helping so many people when all these companies went south, and the one thing that kept working was DeFi. And I think it's going to, very quietly wholesale replace retail banking. The entire back end is going to move over the next, especially outside the U.S., quickly. Inside the U.S., a little more slowly over the next 10 years. And it's, thank God,
Will they, the banks, TradFi, actually use the decentralized networks, or will they just spin up their own permissioned versions and, like crypto Twitter doesn't get their bags pumped?
So it's a big planet. And so maybe I'll stick with I think the implication of your question is, will Chase do it? Will Citi do it? Bank of America do it? I think there's a good chance that those banks, as we know it, don't exist in 15 years. And that they get bought by or morph in other things or whatever. And I'm talking literally the difference between Blockbuster and Netflix. And so, I've said this many times. If I was building a neobank today, I'd be doing it on Solana, because it's the most performant, the most scalable, and it's the most relatively decentralized of the competitors to Ethereum that have kind of, true smart contract capabilities. And so, I think you're seeing a massive, and I've heard this, I haven't validated it, I've heard it. You're seeing a massive number of funded startups building on these alternative L1s, particularly Solana. And so will any of them become bigger in the aggregate than, Citi or Chase or their Chinese brethren are today? Possibly. Think about it, right? Every bank right now, even Citi, exists with an anointed moat in a very specific geography. Okay. What I'm describing eliminates that moat altogether. So if you do a really good job of building virality in a consumer experience with lending and other services that, just work, that should spread like wildfire globally. We don't have that consumer experience just yet where banks are using DeFi to the point where it would just spread like wildfire globally, especially in a way that doesn't require any of that licensing because it's truly non-custodial or uses MPC or some variants. It's going to happen. It's going to happen, and it's going to make traditional banking laws moot, right? I don't know if it'll happen in 5 or 10 or 15 years, but on a log chart, it doesn't matter, right? So at that point, what role does Citi or Chase or the SEC or the OCC play? I don't know.
So on this Ethereum versus Solana and some of the other like alt L1s, the other side of this is that Ethereum supporters say, and you had some I don't know, institutional people kind of say this again, which is that security is paramount. The credibly neutral thing is paramount, and this is why Ethereum will eventually win. Do you just disregard that, or do you think this is like a faulty argument or not that important from
No, it's an
their side?
important point. I just don't think that their perspective on everything else is correct, right? So, I mean, look, Ethereum was rolled back at one point, okay? How do you roll back a decentralized smart contract platform with no off switch? Well, obviously you can't. So therefore it wasn't decentralized. And at the moment it had an off switch. So they used it. Okay. I'd posit they couldn't do that now. I would also posit that that's going to be true for a whole bunch of other smart contract platforms that don't have Ethereum's limitations very soon. So, we're not talking about decades here. We're talking about months and years at the most. And then that's just for the current crop of companies. And then there'll be the next generation and the next generation. And that's good. That's the nature of competition, right? It allows us to keep moving the proverbial ball forward, which we will.
All right, good. One more question on this, like layer 1, 2 space. What do you make of like Bitcoin L2s? Is that dead? Is Bitcoin activity in the DeFi space going to happen on other more like performant chains like Solana or Ethereum or Sui or all this stuff?
Some of the projects are very interesting, but it's a marketing thing, right? Because there's no such thing as a Bitcoin L2. There's another project that has figured out how to basically package Bitcoin into their universe and basically say that they support the Bitcoin community, which they do in their own way. Whatever it is, that's fine. But no different than the way ETFs in theory support the Bitcoin community. All you're doing is basically putting your Bitcoin with a single custodian and creating another token, right? It just in the case of ETF, the token is a security. I'm not putting them down at all. I'm just saying like it's not an L2 in the same way, but more importantly, from nomenclature, I haven't seen a killer use case. Meaning the thing that would really get me excited right now is if I could use Bitcoin for collateral and completely eliminate the wrapping process, the centralized wrapping process. That's the weak link in the Aave chain because the vast majority of loans in Aave are collateralized in Bitcoin. And the only way to do that right now is to basically centralize the decentralized asset. And that's unfortunate. If you want to basically do something in a Bitcoin with a side chain or call it an L2, I don't really care. Solve that problem and you'll be a hero.
Okay, yeah, it's a really interesting perspective. I never heard that. As you were speaking about banks possibly being disrupted by neobanks, I thought that, okay, maybe this is a good opportunity to talk about regulation, specifically the Clarity Act. Like, from your perspective, does what's happening right now with in Washington, how important is that for how this plays out? Like, will DeFi-based challengers actually be allowed to challenge the incumbents?
Yeah. Well, you can't stop them at scale, first of all. There's a few implications. There's a few questions in there at the same time. I think the nuances of the Clarity Act do matter in the short term. I don't think they matter in the long term. I'd rather have any bill right now because it won't matter in the long term. And so that will actually help, catalyze what we talked about earlier around liquidity cycles and anything else. Probably not to the degree everybody's assuming it will, but it will help some. But more importantly, my feelings on the bank are the same, whether we have a Clarity Act or don't, whether the stablecoin yield thing gets thrown out or not, or Coinbase can pay whatever yield it wants. Long term, it doesn't matter. Coinbase is not trying to be a better crypto company. Coinbase is trying to be a better bank. Okay, so they're basically trying to use cleverly because they're trying to basically rally the crypto community to their cause. They're trying to use regulatory capture to offer the services of a bank without having to become a bank. I would do the same thing if I was them. Okay, so let's call it what it is, and then there's nothing wrong with that. That's the sausage making process of Washington D.C. Fine, I like that. Both it's interesting, but it's also necessary, in a free society. But it's not crypto, right? So it's not decentralization. It's not why we all are here, at least in my opinion. I'm here because the system needs to be wholesale replaced from the inside out. If software is eating the world, when is it going to do it for banking? Now. now it's going to do it for banking, in my humble opinion. And that's not what Coinbase is talking about. I kudos to Brian for sticking up what he needs to do for his shareholders, but it has nothing to do with what I'm talking about.
So on regulation, earlier you said that part of Bitcoin's price appreciation a year, maybe 18 months ago, was around kind of some regulatory clarity. I'm concerned, just to bring politics into this a little bit, I'm really concerned about in the U.S. the midterms that are coming up, and then the presidential run in 28. What if the Dems sweep? What if the Dems sweep? I'm worried what will happen to crypto, because I swear they're gonna be so bloodthirsty for crypto. I feel like I've heard this already for like a year plus of blaming crypto and crypto related super PACs for the Dems' loss, and so I just am very worried about retaliatory things. What are your thoughts on this?
So it's a great question. I think about this a lot, and I spend some of my personal time in talking. I'm involved in some of these communities, okay, and I can tell you there's a lot of people who are very worried. Now, I think the consensus is that for the most part they've learned their lesson, because we did it once. We have more money now than we did when we tried to teach them the lesson the first time, collectively. I don't mean me personally, I'm saying the space, right? So you know, unless they're just brain dead, doing the same thing again and expecting a different outcome is a really bad idea. And I get the vibe when I talk to people in the know that the left gets that Warren will not be able to come in and just usurp. It was also a perfect storm because Biden can't spell bank. So when she says, I want banking for your endorsement, he's like, sure, whatever that is, you can have it. I don't care. What do I give a shit? Right. So he didn't care. I just don't foresee that
Power of the auto
perfect.
pen.
Yeah, exactly. So, and obviously I'm trying to be a little funny for effect, but I'm not far off. And so, I don't see that perfect storm of stupidity happening again. I also see more fear injected into this because of the fact that we did make a significant difference in this last election cycle, because we were the proverbial cat backed into the corner. And when you back a cat into a corner, what does it do? It tries to scratch your eyeballs out, right? And so we didn't want to be backed in the corner. We just wanted clear rules of the road and everybody else to go away. And so they wouldn't do that. So we fought back. So I don't know. I am worried about the midterms. So I'm kind of with you there. And again, a lot of it is because of right now, the extreme left is doing a very effective job of creating FUD around things they actually historically have done. They've deported more people than the current president ever has, but they've done a very effective job of galvanizing the troops and organizing the troops around that. So, look, I think the bottom line is that this FUD is exactly what I was talking about earlier when I say, we could end up with this kind of spiral in the short term that ends up with the wick down, and which is what they want, by the way. The agitators, they're not concerned about solving this problem, because if they were, they would have been up in arms when it was happening under Obama. So that is a real concern to me. But I think at the end of the day, people care most about their pocketbooks, and better or worse. And so, I do think that going into summer Q3, even if that's the worst case scenario, then the money printing that will offset those fears. But I do expect Trump to lose a little bit of ground at a minimum in the midterm. But I think the fear is transitory in a way where it will rear its head again in the next presidential cycle, because the narrative will be, hey, well, wait a minute, this is the safest America's been in 50 years. Do you want to go back to what we just went through? Like, I could see the scenarios playing out in my head. Do you want to go back to what we just went through? Do you want open borders? Do you want fentanyl streets? Et cetera, et cetera. And that's going to be the discussion. It's going to be, how do we get everybody to participate in the tech boom and all these things, right? And so hopefully we get to that point, which is a debate we should be having.
Yeah. Isn't the murder rate in America down like 90% in 1 year already? Something like that.
So
So
not 90, but it's a lot. Yeah, I think it's like 30,
Okay.
30,
So
35, I think is whatever, which is an insane number.
yeah,
I mean, that is
in
a
1 year.
remarkable number, and it's and it's something that the current administration is not explaining correctly, to their detriment. Yeah.
So one more thing on this, just like I feel like I feel that what you say heartens me, but like I've listened to other people, like Christopher Perkins on another podcast was talking about he's speaking with lawmakers on Capitol Hill, and privately they've all said, yeah, we can get the Clarity Act done. We're down with this. We can get it through the various whatever commissions or council things that they have to get through. But on an open floor vote, when it's public, these Dems are saying we just cannot be seen to be on the same side as Trump. And so it seems to me it's like gotten even more partisan. Is what worries me. Is that
Sure, but that's what the right
yeah.
did to Obama, right? I mean, they literally, went out of their way to block everything, and that was part of their narrative. They'll do anything. It doesn't matter. We say, people need water, and here's the water, and they'll say, no, 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 no more water for everyone. It's bad for you. And so they did that for 3 years, and now, like the point I just made, right? The agitators are basically crying foul about deporting, people who are rapists and murderers and all these other things, and they did it themselves. So it's the nature of the primary process that we have evolved into that allows the extreme wing of both parties to have an outsized voice versus middle America that just throws up its hands and goes, you're all nuts. I am convinced that there's 30% of this country that will vote for Vance in the next election cycle, no matter what. And there's 30% that will vote for, Newsom or whoever it becomes in the next cycle, regardless of what they do, Mamdani or whoever it is. And there's 40% in the middle that are going to latch on to a narrative that makes sense, just like people latched on to, we got to close the borders, right? We've got to basically fix the food pyramid. Like there was a lot, and by the way, we need somebody who's not a nut, right? And it was pretty ironic that what we got was somebody who was perceived as not being the nut. But I don't know exactly what the narrative is going to be that replaces this for that 40% in the middle, but I promise you there will be one. So we'll see.
Yeah, fascinating. Narratives do sort of pop out of nowhere and evolve quickly, so it's going to be fascinating to see what happens as we move through the year here. David, you seem like you want to say something?
Yeah, I just have one. I mean, if we're going to change topics, I have one more topic I'd love to hear. So perp DEXs, there was a big narrative last year, kind of cooled off in Q3, Q4. I feel like just like in the past week or two, it started to heat back up again. And I was wondering if you have thoughts on perp DEXs. It feels like maybe TradFi is finally starting to kind of get the benefit or the appeal of this. And I wondered if you thought it had legs or if it was important or whatever.
It does. It has legs, and I think your interpretation of the fact that it's rearing its head again is correct. It's the logical evolution of where we were with BitMEX 8 years ago. Right, it's less counterparty risk, especially as the technology improves. That's really the remaining counterparty risk is technology, and as volatility rears its head, up or down, DEXs as a result become interesting. Just like the centralized purpose exchanges do more volume, the more volatility there is, and I suspect more and more of that volume will move to the DEX purposes. How do you say it? The DEX perp markets.
Perp DEXs.
Perp DEXs. Thank you. It's too late for you. And that's a good thing. It's part of that wholesale replacement of the banking system with the DeFi stack that I talked about earlier, and I love it. And I hope
so. Yeah, it seems what's happening right now with the perp DEX is that them sort of coming back up here and like in volume amounts. It's people trading precious metals, RWAs, on them right now. Like they're not trading crypto as much, which is interesting, right?
Yeah. I don't care. Like it's all token. Look, I don't care what you tokenize. Yeah. You are accepting counterparty risk if you tokenize real world assets. That is not just tech. It's now who's ever holding your gold or whatever it is. And that's fine. That's great. That's what competition does. It's not going to be gold in 9 months. I can't promise you that, but I'll come as close to promising as I can. I can without actually promising you. Okay, it's going to be something else. Tokenized X, whatever X is. Maybe it actually is X
promise
stock.
you.
I don't know.
I'll promise you. When I see gold this morning, I see like these.
It bodes
kind
well
of
for the perp DEXs is that they can just pivot to 100%. Whatever's hot, right? Like
right. So, but this makes my point from earlier about the banking system, right? So, if you're tokenizing stocks, bonds, gold, commodities, crypto itself, you've got your meme coins, you've got tokenized versions of prediction markets, which I think is coming. It allows these markets to exist independent of narrative, because you don't have to worry about the bank, you don't have to worry about pump.fun, you can basically compete on the platform and the protocol, and then have user experiences that aggregate it all. And that's super interesting. And I think that's the future of banking to me. I would not be a net buyer of banking stocks right now. So I just would.
They had a great 2025 though. They did really, really well last year.
Sure. So did gold.
Yeah,
obviously.
That's true.
I'm not buying gold either. So I'm a 10-year. I buy things for the 10-year. I'm not a speculator. If I cared exclusively about the kind of late stage empire narrative in my kind of investment thesis, I would own a ton of gold. I'm already looking for what's like coming, 10, 15 years, and I've made my bets, and it's not that.
Last question for me, still on this perp DEX thing. Just from what you've said in this conversation, it sounds to me like you would be more interested in perp DEXs on kind of nominally decentralized open L1s like Solana versus like kind of narrow ones like Hyperliquid or Lighter. Is that correct?
Not necessarily. When it comes to usage, I mean, I'll look at. I think all these projects are interesting to me. It's always interesting to figure out why developers make the choices that they do in the moment that they make them, because a lot of times they make choices on a whim and then they try to justify their choice later, right? Or somebody gave them some money from, some Coinbase Ventures, or what's the guys who funded Solana? I forget. Kyle Samani's fund. Anyway,
that's right.
Yeah, Multicoin, right? So then they'll develop on Solana. Developers don't always make wholesome choices for wholesome reasons, and so that has repercussions in the long term. The more successful you get, the more repercussions those choices matter. If you die, it doesn't matter, obviously. And so developers often have to refactor platforms, even if it's a decentralized platform. That's why Aave, I think, is on version 5 right now, right? And the problem with decentralized systems is versions 1 to 4 still exist, right? Whereas version 1 of Oracle doesn't exist anymore. And so that's the challenge with decentralized systems. But yeah, I think I learned something from these architectures, regardless of what they do. That's one of the reasons I joined the board of Algorand, because one, I think they are poorly marketed to the developer community, and they're friends of mine. Obviously, I joined, so they would agree with me. And there's some things that they're doing, and I want to learn. I looked at this and I said, okay, this will help me get closer to that community, and I think I can bring maybe a little bit of wisdom after 30 years to talk about how to integrate and engage with developers. But they've got a big development community already to learn from.
All right, Bill, and as we wrap here, I know it's late for you. Just want to give you a chance to talk about Abra. So I know Abra from 2018, I believe. I was playing around with it. Was at that time, I feel like it was a retail-oriented self-custody app. Correct me if I'm wrong. And it has now sort of evolved into a wealth management platform. Would that be accurate?
Yeah, that's partially the legal moat, if you will. I feel like Abra, in a way, was similar to Blockbuster. I'm sorry, not Blockbuster. Netflix in the early days when they used to ship the DVDs physically to your house. Yeah, the youngins watching, yes, they ship DVDs to your house, and you have to ship them back, and you get the next DVD. Now, their vision was to basically be the I don't know how you would say that, eloquently, but the one-stop movie house for the internet. Okay, and in the early days of the internet, you couldn't ship the ones and zeros, so you had to ship the physical plastic. And so, Abra, to extend the analogy, we wanted to be the bank for the digital generation, and that to me was decentralized out of the gate. And the only thing that existed when we started Abra was Bitcoin. There was no Ethereum. I was intimately familiar with Nick Szabo's writing on smart contracts, but none of that existed. So we came up with a way too early of building that. We actually created a synthetic dollar out of Bitcoin. All right, which ironically we just recreated using Solana, which we announced at the Breakpoint conference. We created a new stablecoin called USDAF, which is a yield-bearing stablecoin similar to Athena, but Solana based, back to our roots. Okay, but our vision is still the same. We want to build a decentralized banking system to take advantage of all these rails, but now we have a lot of rails to take advantage of. Right? We have true stablecoin rails. We have multiple ways of doing smart contracts, and we still have to deal with the legal requirements from jurisdiction to jurisdiction. And so what we've built is it uses RIA, rules to instantiate the service, wealth advisor rules, but it's an MPC based architecture where each client is actually getting their own vault, right? So it's a hybrid between, just putting things in a ledger and burying them in the yard, and having your assets online and being able to take advantage of DeFi and smart contracts and all these things, but not commingling assets and not putting them on my balance sheet, which is the most important thing, right? So it doesn't look like a traditional bank. And so now you're already moving down the path of actually looking like what I was talking about earlier, which is how a banking system should be run. So for us right now, it looks very much like a traditional wealth advisor. And you'll see things that we're going to do this year that combine looking like a decentralized bank with looking like a wealth advisor, and then being able to provide more and more crypto native services to our clients. Yeah. Today, it's very simply borrowing against Bitcoin, borrowing against Solana using a vault as for the collateral, or maybe earning yield on dollars or Bitcoin or Ethereum in a vault. And the progression of services along those lines is going to accelerate this year.
Boy, I bet you were a hit with regulators. Going through this process.
Wet dream. I am literally the lawyer dream. I don't shut up, and I don't stop. So, yeah.
All right. Love it. Bill, thank you so much for your time today. Very interesting insights. I love the conversation today. If anyone wants to check out Abra, it's abra.com, and at Bill Barr on X. That's right, I believe.
Right.
All right. Thanks everyone for listening. Have a great week.